Hello, it's delighting to see you again in this weekend edition of Into Vietnam, which summarizes the most outstanding events in the past week, top stories of the week. Auto sales are boosted in the first 2 months of this year thanks to improvement in consumer confidence. Fed urges Vietnam to have its own independent central bank. Vietnam State Firm's revamping plan will be the focus of this week's business talk, which is joined by Mr. Sanjay Khanra, the representative of the International Monetary Fund in Vietnam. Let's begin with this week's figures. According to the General Statistics Office, the number of imported cars in the first 2 months of this year increased sharply in terms of value and volume. The country imported 6,000 completely built units of CPU worth $113 million in January-February period, an increase of 39.8% in volume and 26.1% in value year-on-year. The figures reflect the recent influx of international automakers. The rising number of imported vehicles is evidence of restored consumer confidence following the improvement in the economy. In 2013 also, there was the marked rise in the imports of CPUs. As many as 34,500 CPUs, valued at $709 million, were imported, marking an increase of 25.9% in volume and 15.2% in value on year. The ANZ reiterated the view that the State Bank of Vietnam will probably keep its refinancing rate at 7% per year in 2014. However, due to a separation between the lending rates of commercial banks and the policy rates, credit growth has not boomed to even with change in policy rates. Rising liquidity in February led to falling short-term interest rates. Overnight interest rate on interbank market fell to an average of 2.53% and bottomed at 1.24% on year. In January, the average overnight rate was 4.34% per year. The State Bank of Vietnam has issued short-term bills to absorb excess liquidity, leading significant reduction into bond yields. Low deposit interest rates are encouraging investors to switch to domestic stock market. Since early this year, the foreign funds continue to pour capital into the domestic stocks with over $100 million since the beginning of 2014. In addition, the ANZ says the revision of Circular No. 2 on debt classification by the State Bank of Vietnam may hide real threat of bad debts in the banking system. According to the Ministry of Industry and Trade, the inventory index of manufacturing and processing industry increased by 1.8% on month in the first months of 2014 and 12.7% against the same period last year. Several industries recorded a high inventory index, including sugar production of 50.7%, milk production of 24.9%, animal and poultry feed production of 34.8%, footwear production of 36.8%, and pulp production of 45%. The high inventories were due to high accumulated inventories from previous month and low consumption in many industries. Notably, the consumption of iron, steel, and cast iron in January decreased sharply by 20.8% compared to the same period last year. The purchasing power of milk products, animal and poultry feed, and cement products also saw a year-on-year decreases of 2.7%, 1.5%, and 9.4% respectively. Coming up next in the program is some major macroeconomic and investment news. On March the 11th, the Vietnamese Finance Minister Dinh Dien Dũng had a working session with the chair of the United States Federal Reserve Bank, or Fed, Ms. Janet Yellen, on Vietnam's macroeconomic situation and budget and fiscal management in 2013, orientations for 2014. The chairwoman suggested Vietnam should set up an independent central bank as these should have to effectively evolve monetary policy, keep inflation in check, stabilize the macroeconomy, and to create community-based trust. She said Fed is an independent agency from the government, aiming to manage national monetary policy, supervise and regulate banking organizations, maintain the stability of the financial system, and provide financial services for custodial and deposit organizations, the U.S. government, and foreign organizations. The statistics of the State Bank of Vietnam shows since mid-July 2013 to the end of February 2014, the average lending rates in Vietnam dong have stayed unchanged. In 2013, the State Bank of Vietnam slashed policy interest rates by 2% per year, maximum short-term Vietnam dong lending rate for prioritized areas 3% per year, maximum Vietnam dong deposit rate 1% per year. From end of June 2013, the State Bank of Vietnam allows banks to decide Vietnam dong deposits for more than 6 months terms. The solution made deposit and lending interest rates drop continuously in the first half of 2013, facilitating the central bank's implementation of controlling inflation and stabilizing the currency market's task. However, data of the State Bank of Vietnam shows that since mid-July 2013 to the end of February this year, the average lending rates in Vietnam dong have stayed unchanged. At state-owned commercial banks, prevailing lending rates to priority sectors range from 7 to 9% per annum in the short-term loans and 11 to 12% per year for medium and long-term loans. Interest rates for normal commercial loans range from 9 to 10.5% per year for short-term loans and 11.5 to 12.8% per year for medium and long-term ones. At commercial and joint stock banks, the corresponding rates were 8 to 9% per year, 11 to 12% per year, 9.5 to 11.5%, and 12 to 13% per year. According to the State Bank of Vietnam's branch in Ho Chi Minh City, total non-performing loans in the area are currently reduced to nearly 44.7 trillion dong, accounting for 4.7% of total outstanding loans. Non-performing loans are mainly concentrated in the business and production sector, with over 74%, while non-production sector accounts for about 25%. Bad debts are at more than 5.8 trillion dong in real estate and 2.1 trillion dong in consumer loans. Totally, non-performing loan ratio at commercial banks has currently been pulled down to over 4%. To accelerate the handling of bad loans, by the end of February 2014, commercial banks in the city have restructured debts for nearly 6,500 customers, with over 156 trillion dong. However, while commercial banks have sold nearly 9.8 trillion dong of bad debts to the Vietnam Asset Management Company or VAMC, the group of financial companies and financial leasing companies has to finance haven't got any debt sold.
According to the Ho Chi Minh City's Department of Planning and Investment, the city aims to attract $2.5 billion in foreign direct investments this year, 20% higher than last year's figure. The top priority could be given to foreign investors' projects in high value-added industries such as engineering, electronics, IT and biological technologies, processing and manufacturing, banking and finance, telecommunications, real estate as well as tourism. The goal was set based on the city's encouraging FDI investments in 2013 and in the first 2 months of this year. The city started this year also with a significant amount of $217 million in FDI being registered in the past 2 months, which is 226% higher year-on-year. Meanwhile, 14 ongoing projects were also allowed to increase their capital to $52.6 billion.
Japanese investors are heading to Vietnam as of late, as Thailand is rocked by political instability and China becomes less attractive with rising wages. In 2013, Japanese capital flow to China dropped to $6.5 billion, less than half of the $13.48 billion in 2012. Similarly, in Thailand, in 2011, Japanese investment amounted to $7 billion, while in 2013, the number dropped to $2.5 billion. Vietnam, on the other hand, experienced the opposite trend. Foreign investment increased from just $169 million in 2010 to $4.45 billion in 2013. The Japan External Trade Organization, or JTRO, said, while its peaceful environment and low-cost labor force had always been appealing, Vietnam is now also the destination of more important high added value fields such as electronics. In a 2013 survey by JTRO, 70% of 435 Japanese businesses in Vietnam have plans to expand their Vietnamese operation and make the market a major base. Hai Phong Port, the biggest port in the country's northern part, is expected to have an initial public offering or IPO in May, a preparatory step towards equitization. Hai Phong Port is valued at $205.7 million, as much as 201% of its book value. The state holdings in the port are estimated at $155.6 million. Hai Phong Port equitization plan was scheduled to be approved by mid-April. It then plans to go for an IPO and win 6 strategic partners within a month and a half. Effective July, Hai Phong Port will operate under the joint stock corporation model, with 25% of the state's holdings in the port put on sale. Last April, the Prime Minister pushed for privatization of the country's major ports, including Hai Phong, Saigon, Quảng Ninh, and Da Nang ports, with a directive that 25% of the state holdings in these ports should be made available for the public through IPOs, and it must be implemented within 2014. Vietnam aims to have 4 oil refineries fully operational by 2030, capable of processing 16 to 20 million tons of crude oil per annum by 2020. Projects for coastal socio-economic development, along with adaptation to climate change, are expected to incrementally increase the capacity of the Nghi Sơn oil refinery and the petrochemical complex to 10 million tons per year in the 2013-2020 period. Dung Quất oil refinery's capacity will be increased from its current annual 6.56 million tons to 10 million tons, while 3 ethanol plants will gradually step up production to 30 million liters per year. Plans for the 2021 to 2030 period for the Long Sơn and Vũng Dâu oil refineries will further elevate capacity to 10 million tons and 8 million tons per year respectively, bringing total capacity to 38 million tons per year. Now for trade news, we continue the program.
According to the latest data from the Association of Natural Rubber Production Countries, Vietnam has surpassed Malaysia and India to become the third largest producer of natural rubber worldwide in 2013. The association reported that Vietnam's natural rubber output was estimated at 1.04 million tons, up 20.8% year-on-year. This is the first time Vietnam natural rubber output surpassed the 1 million tons threshold, jumping from 5th place in 2012 to 3rd place in 2013. Malaysia and India slid to 6th and 5th place in 2013, while Thailand and Indonesia remain the world's leading rubber producers. According to the Ministry of Agriculture and Rural Development, Vietnam's rubber output has risen 20% between 2011 and 2013 because the growers are using higher yielding varieties. In the first 2 months of 2014, rubber exports from Vietnam fell to 104,000 tons, down 25.4%.
Vietnam's mobile handsets and spare parts brought home $3.2 billion from exports in the past 2 months, representing a rise of 22.9% and topping the list of processed industrial products. Major importers of Vietnamese mobile handsets and components were the EU, the United Arab Emirates, the United States, and Russia. Their export value helped raise total 2 months export earnings of processed industrial products to $15 billion, up 16.8% over the same period last year. However, export earnings of these industrial products fell 18.8% to an estimated $6.74 billion in February over the previous month. Key products attaining high growth included garment and textiles, $3.21 billion, up 30.1%, footwear, $1.51 billion, up 27.4%, wood and wooden products, $884 million, up 20.2%, and machinery, equipment, tools, and spare parts, $979 million, up 4.4%.
Cần Thơ recently sold 14,000 tons of rice abroad, bringing its total export of grain so far this year to 193,000 tons, up 5.7% over the same period last year, and earning of $99.5 million. The increase is attributed to efforts by the city's rice exporting businesses in seeking new markets in Asia and Africa. Municipal authorities take rice as a key foreign currency earner, which generates jobs and ensures a steady income for farmers. In addition to applying the large-scale paddy field model across the area of 20,000 hectares during the 2013-2014 winter-spring crop, they will encourage businesses to sign purchasing contracts with farmers, ensuring sufficient rice for export. The city's businesses are aiming to ship 1 million tons of rice in 2014, up 140,000 tons on year, for over $516 million.
Among 3 economic reforming targets, revamping state firms has been in the spotlight following the discovery of numerous errors and loss of state-owned groups like Vinashin and Vinalines, causing tremendous damages to the national economy. Economic experts all believe the restructuring process must be stepped up further to create a fair business environment and recover investor confidence. More in our business report. Looking back at their development, economic experts say Vietnam made a rush when wishing to make a giant leap in improving their competitiveness among intensive global integration. To cope with the strong competition from overseas when joining the World Trade Organization, the government set up a large number of state firms and gave them too many privileges as well as self-governance. This created an unfair business environment and go against the market mechanism.
Cả lãnh đạo nhà nước đều nói nước Việt Nam là một nền kinh tế thị trường. Đi đâu trên thế giới cũng đều kêu gọi các nước trên thế giới là công nhận Việt Nam là một nền kinh tế thị trường. Mà nếu doanh nghiệp nhà nước không hoạt động theo cơ chế thị trường thì làm cái gì đấy?
Do chúng ta phát triển kinh tế theo định hướng thị trường xã hội chủ nghĩa có sự điều tiết của nhà nước, cho nên là hơn ai hết chính doanh nghiệp nhà nước phải hoạt động theo cơ chế thị trường, không thể có rơi rớt cái tình trạng bao cấp như từ trước này.
Statistics of the World Bank show between 2007 and 2009, loan overholding rate in state firms in Vietnam was 307%, much higher than the rate of 183% in private companies and 145% of foreign invested ones. In the meantime, state firms' profit expanded by 17% in the period, much lower than the 19% of the economic's nominal growth and 27% of foreign company. The World Bank came to a conclusion the special privileges and rights given to the state firms actually did them harm, affecting the whole economy.
Cơ chế thị trường và doanh nghiệp nhà nước có nghĩa là đòi hỏi họ làm các dự án thì phải là tính trên cơ sở của mục tiêu lợi nhuận hoặc là hiệu quả kinh tế, chỉ ít phải tính toán đầy đủ hiệu quả kinh tế. Họ phải chấp nhận cái quy luật là lời thì ăn, lỗ thì chịu. Chứ bây giờ các doanh nghiệp nhà nước cái cơ bản nhất là lời thì họ ăn, họ bỏ túi, nhưng mà lỗ thì đẩy hết cả gánh lỗ lên cho xã hội phải chịu.
Both local and international economists agree that state farm system in Vietnam has become too big to break down as well as too huge for the government to intervene in case of any big shocks. Therefore, the firm should take an active role in changing their management, personnel and operations.
Chúng ta phải đi đến một cái tình trạng là phải học quản lý tốt hơn. Quản lý tốt hơn là gì? Là tất cả những việc gì về kinh doanh dòng tiền hay là đề án tổ chức, tất cả nó đều phải có một cái khoa học của nó và nó hiện đại hóa nó lên. Hiện nay là chúng ta không những cồng kềnh mà còn bao nhiêu những nhân sự cũ còn ngồi đấy, không làm được những việc mà cần thiết của một nền kinh tế mới, một nền kinh tế phát triển hiện đại. Thì chúng ta phải xem lại về vấn đề đào tạo nhân sự cho phù hợp, đào tạo những các cái lãnh đạo cho phù hợp, và tất cả những cái chuyện gì liên quan tới cái vấn đề băng nhóm này nọ cái khác chúng ta phải nhanh chóng mà loại bỏ nó ra, để trong các cái doanh nghiệp nhà nước là hoàn toàn hiện đại hóa, chứ không phải là vì lợi ích của một nhóm nào.
Experts recommend Vietnam should force state firms and groups to publicize the information about half and full-year financial reports that related to ownerships, board of directors, list of investment and progress of their contracts and loans. The revelation of information is necessary to assess and revamp state-owned enterprises. Vietnam plans to revamp state firms with the focus of equitizing 432 of them by the end of 2015. However, Mr. Sanjay Kanra, the representative of the International Monetary Fund in Vietnam, says the plans has turned out to be too ambitious, considering the fact that restructuring process has been low in the past 2 years. More to follow. Mr. Sanjay Kanran, first of all, thank you so much for joining our program on VITV channel. In its plan to revamp state firm, 432 state firm in Vietnam will be equitized from now to 2015. But the pace of the process has been very slow and make people doubt about the feasibility of the project. What's your take?
Well, first of all, I think it is certainly an ambitious plan. Especially when we look at what has been achieved in the previous 2 years. The state of the process of equitization has been somewhat slow. So 432 enterprises to be equitized, or economic groups to be tackled in a space of 2 years looks very ambitious. We are hoping that with the emphasis that the Prime Minister has placed on the process can be accelerated. The attention that has been focused, in particular there was a conference that was held recently. We are hoping that the process can be accelerated, but it's an ambitious target for 2 years, yes.
The government has set out that buying stakes and unprofitable assets in state firms will be the most important and key way to restructure them. However, it's estimated if the policy is implemented, about 65% of state firms will have the majority of their stake controlled by the government. Do you think this is the right direction of the government?
Well, first of all, I think relating to unprofitable enterprises, if the state is willing to take enough action, if the state is willing to sell those assets at whatever price is available in the market, that would help. If the firm or the assets have negative value, then support from the budget can help to accelerate the process of equitization. At the end of the process, if there is still a substantial stake in many of these enterprises, that will cause some problems, because at the end of the day, the new owners, the people who put in money into the enterprises, want control so that they can make changes and make these enterprises more efficient. So that will be constrained also in the initial stages in terms of getting buyers.
Some local experts express their worries that the direction by the government may harm some healthy state firms, because if they buy assets of great companies, then their health may be affected too.
Well, it all depends on a case-by-case basis. If there is an enterprise that is making losses because its management is not effective, a healthy firm can improve things by improving management, and if there are linkages between the weak firm operating in a certain area and a healthy firm, then the process of restructuring can benefit. So the weak firms or the weak enterprises can benefit. But at the same time, the healthy enterprise has to carry a weak balance sheet. So it does, until the restructuring has taken place a burden on the balance sheet of the healthy enterprise.
Do you think that in this case, very weak state firm and unprofitable one must be forced to go bankrupt?
It is certainly an option. It is certainly an important option that should be exercised. If the firm has been run poorly for many years, if the balance sheet is very weak, if the net worth of the firm is large and negative, it is best to shut down that firm, because it will create problems in the future. It will be a burden on the economy. It will be a burden on the budget. In the end, it is best to shut down the firm and restart again.
Vietnam planned for the government to take big part in key sectors that determining its national security, like gas and oil production and distribution, electricity and mining. What do you think are the sectors that the government should step down and give way to the private sector?
The decision should be made on commercial lines. If the private sector is able to do a good job of entering the sector, increasing profitability, increasing exports, then that would be a good idea. At the same time, if the state is able to improve governance in many of these firms effectively and in a credible sort of a way, then there is no reason why the state needs to move away. In many countries, when certain sectors are very large, it is hard to bring enough domestic, private and foreign capital. So the state can still have a useful role to play in some sectors. So I don't think one wants to think of these in a very dogmatic sort of a way, but the real question is, can these firms be run profitably, whether by the private sector or by the state-owned sector?
Thank you so much for joining our program today.
Thank you very much.
And the final part is the summary of the local securities market during the week. Well, that's all for now. Thank you so much for your attention. For comment and feedback, you can reach us via email at intovietnam@vitv.vn or give us a call at 0422208288. Goodbye and enjoy your weekend.